But if you've done the research and you know where this thing is headed, then if you buy it at 200,000 and the value goes down to 150, 130, and then it gets back above 275, you're in the green.
Sitting down today with Navin Prithyani. Navin, we spoke, I feel like it's a long time ago. We definitely have to catch up on a couple of things with trading and, of course, beyond that. But good to see you on the podcast again. Good to catch up and look forward to talk trading once again.
Absolutely, absolutely. Thank you again for having me. It's always a pleasure to be here.
I don't know what to start, but tell me a bit more about what you're up to and kind of what you've been doing these past few years since we had you on the podcast.
Sure. I think looking back, I've been there for almost every milestone that Desire to Trade has gone through. In fact, I have a flight tonight, and look what came into the mail. I'm looking forward to reading this. I see there's a lot of nuggets in here that you've taken from your podcast that you do. And I like the way you ask questions and you get deep into the topic. So I'm sure there's going to be some good nuggets in here for me to cover. So I'm looking forward to reading this on the flight today.
Tell me a bit more about kind of what trading represents for you now. Is it still your main thing you do every day? Or I know you also invest in other things. How do you see trading with like other things in terms of making money now?
So trading is still my bread and butter, right? It's if you put it into financial terms, that's where the cash flow comes in. Trading is not an asset that you can just live off of for the rest of your life. It's a cash flow engine. That's all it is. What I do with the cash flow is other things. So I'm actually a big animal lover, and I'm actually living in Dubai right now. So we're buying up veterinary clinics over here. So we've set together a powerful board, and we're buying all the small mom and pop clinics as well as hospitals. So that's where that's the next big thing. Let's put it that way.
Tell me what made you want to go into that business as a trader, because it's a big change, I guess.
It is. Trading is, I would consider, a pinnacle of cash flow. So, when everyone talks about, well, how do we make some money? People talk about passive income. How do I make as much money as possible? Well, as much as possible comes under the paradigm of trading, right? That's where I think maybe let me take a step back on that. I wouldn't say that's the most profitable thing to do, but if you are good at it, compared to doing it with real estate or any other sector, I would say trading falls under what I believe is the best way to do it, because it allows at least a newer generation to do what they like to do, and which is be remote, So it's just pure cash flow.
Interesting. So the business you start is helping you grow that cash flow, or is it helping you kind of multiply it, or is it more like a long-term thing?
It is. So once we go from the cash flow model, now it's about, well, how do we take the next step? What is the next step after getting a bunch of cash flow? So if we take it as an example, most people go through their journey as, they go through high school, they go through university, and then they get a job. And the job is technically cash flow, right? Not passive cash flow. It's an active cash flow, but it is cash flow. But what are they going to do with that? They can't do that for the rest of their lives, right? I know I would trade for the rest of my life. That's definitely going to be there. That's never going away. But there needs to be the next chapter, so you'll get a lot of people obviously constantly telling you, as if you can trade for a living, why would you do anything else? I think that's the wrong question to ask, is why not do anything more? So you want to push yourself further to do bigger and better things. And, animal care is something I'm passionate about, and it's something where I'm jumping into Dubai. Dubai is, as you know, 5-star everything, but the animal care is a little bit behind on this part. So I'm working with the governments and everything here to try to see if we can step it up and actually grow that sector as maximum as possible.
Getting back to trading, I would say, has your style changed over the past few years? Is it still the same thing you're focused on and doing day in, day out?
Still the same. So if from our very, very first podcast we've done together to all the follow-up, interviews that you've done with me, I haven't changed one bit. I believe in consistency. Consistency is the key to everything. We've been doing the same thing since 2009 all the way till now. Nothing's changed.
I think you rely a lot on market sentiment to determine like what you're going to get in and whether it makes sense to place a trade. Is that a big part of what you do? And is that the reason why you really haven't changed much, because you kind of follow what the market does first? Or,
I'm heavy on what's the chart trying to tell me, rather than me plotting tools on it and then saying, what's my tools telling me? I really don't like these middlemen, whether it's an indicator or tools or anything like that. You've heard me say this countless times is the chart paints a picture. It's nothing but receipts. So anything that you see on a chart is a transaction of the past. It is a receipt on how people are actually interacting and what have they decided. That information is far more valuable than saying if a trend line crosses, then it must be going that way or that way, So we take it a little bit more complicated approach. Now, the reason why we're one of the largest giants in the industry when it comes to the educational space, it's because we don't change our ship. We're a small ship can maneuver quickly. We're a giant, and being a giant that we are, we can go very, very slowly because there's so many students following us, so many students looking after how we do things. It's very important that we teach things the right way, in the way that can last for generations to come, rather than this is the new hot thing. Let's do it for 1 or 2 years, and then you got to jump onto the new hot thing again. So we need something that's consistent, that can last for generations.
Curious to hear, what does this mean for you now with the current market, where you have a lot of more volatility, a lot more faster moves, kind of maybe more kind of crazy price action? Does that mean anything for you? Is it different to trade now, or is it the same thing as it's been before?
No, it's exactly the same thing. In fact, I like these type of volatile movements. So there's two sides. One's on my Forex side of things. I'm actually in a position CAD yen. If you want, I can pull that up. This is more of a long-term position. So in 2024, I don't know if you've seen that we've broken some records on YouTube. We've made 6-figure trades. And then we looked back and said, all right, if you're doing crossing $100,000, $150,000 in a single trade as a retail trader, what more can we do? And a week after that, we started hitting numbers of 300,000 plus per day. So we're breaking records that way. 2024 was Urban Forex's best year ever as well. So what we're doing is, because of the volatility that's coming into the market right now, we're taking our dividends, and we're going to be investing very heavily in places like Turkey. One of the first stops that we're going to be doing, one of the reasons why I'm traveling tonight, is to meet up with my CEO to discuss how we can buy a big stake in the airport in Turkey. So that's something that's I'm looking forward to the markets crashing, being a little bit more volatile. Thank you, Trump, even though some things I might not agree with him, but his volatility for us traders and investors is a gold mine.
You mentioned dividends. Are these actual dividends from stocks, or are they more kind of just the returns of trading?
Returns of trading, right? So all revenue Urban Forex generates. So course revenue, trading revenue, prop revenue, all of the revenue that comes in after paying all expenses, what's left over is the dividends, right? Shareholders' dividends. So we reinvest that back into something even bigger and stronger, rather than let me just go buy a Ferrari. You know what I mean? Like, it's a traditional course company will do that, but as I told you, we're not a giant for no reason.
It's definitely a fact that people who get to a certain point in terms of money, they want to spend it in like cool stuff and like you said, Ferraris and cars and maybe like nice mansions. What made you want to go and invest into other things? Because you could probably go and buy a car. What makes you want to go and invest in other things that can make you even more money?
I guess I'm a little bit cheap in a way where I think similar to Warren Buffett, where it's like the number is basically how you win the game. The larger the number, the larger the higher score. Believe it or not, we do compete, right? Everyone says, I don't look at anybody else and this and that. I get that. You should look at your own performance and beat your own game that you do year after year. But at the end of the day, it's still a measuring contest, if you want to put it that way, especially on Wall Street, right? Who's the biggest dog on the street? Who's the biggest size on the street? That's all it is. And we're in the game to win, so we want to make the most bucks, the most efficient way and the safest way.
What do you tell people who are new to trading these days and they want to get into it? Like they might want to go to cryptos, they might want to go to maybe Forex is kind of less appealing these days. Should they jump in and kind of follow the cool stuff, or should they go and maybe learn some more timeless principles instead?
Yeah. So crypto is not necessarily a bad thing. It's good. It's where the hype is right now. It's where a lot of money is being made at the moment right now too. And who are we to judge where the money is being made, right? When we started, we jumped into a market where it's like a business online. What happened to brick and mortar? So I come from that era, and I understand a leap of faith, a leap of change. I get that, but I've also been around when I've seen .coms fail. I've seen all these going through the process of seeing how the tulip mania happened. So I've lived long enough with all this white hair, lived long enough to see there are things where a leap happens into the market and you want to get into that. And then there are things where things get so overly bubbled and then they crash. Even real estate goes into that market. It falls underneath that. But whatever's the shiny new thing will always be attractive. I think timeless principles are always going to be the case. It's you want to buy something, you're never going to pay 3 or 4 or 5 times more than what it's actually worth. So timeless principle is always going to be there. It's just human nature. We're always looking for a deal. And when we stop doing that, I think we move away from the logic of trading.
How do you handle these drawdowns that might come not so often, but kind of occasionally, and you have to kind of go through a series of losses and then recover?
I think the drawdowns are part of the game. If I can, you want me to share my screen with you? I can show you. Let me do this here real quick here. So I'm in this Etienne position for 54, 55 standard lots, more or less, on this thing. And this position started during the NFP last week on Friday. And there was a drawdown that we had to sit through, and this thing went down for like $15,000, $17,000 before it starts coming back up. And now we're back in the green. And this thing, I am looking to take this up all the way up to, what looks like it might be a little over $250,000 to $300,000 trade. So it's a pretty big position. Size is smaller, but the distance is further to go. 108 is where we're targeting on this thing as a firm and as our community. But I think drawdowns are a common nature of what needs to be accepted. Drawdowns are something that scare people. Let me put it to you in this way. If you know what you have to do, and let's say you want to buy a car, and that car is worth $300,000, for example. Okay, let's say you're going for a nice Rolls Royce. Okay, you're going for a secondhand Rolls Royce, right? You're going for a nice $300,000 secondhand Rolls Royce, and it's being offered to you for $200,000. Now you know what it's worth. It's worth $300,000, and you're about to get it for $200,000. If you buy it for $200,000 and you stick a stop loss just 1 cent below that thing, you're missing out on the deal itself because you're a stickler for a stop loss. So a lot of traders suffer this thing because they're afraid of drawdown because no research was done. So they're working on a coin flip mentality, which is play the odds, play the odds, play the odds. And that's all they're doing. They're playing the odds, and therefore control your drawdown, control your risk. But if you've done the research and you know where this thing is headed, then if you buy it at 200,000 and the value goes down to 150, 130, and then it gets back above 275, you're in the green. It's just that mentality. People don't have an idea of what is it supposed to be? Where is it headed? And where is it now? Should I start taking a position? Should I start getting more greedier as the price goes lower into drawdown? Or should I say, follow the timeless education that elders have passed down to us and saying, when it's in the red, don't add money to it? Well, it depends who's giving you that information. Is it coming from a technical analysis person? Or is it coming from a person who understands the whole overview of what are you actually buying?
What about when you have multiple trades in a row that lose money or end up being at your stop loss? Or do you make your stop loss big enough where they really don't get there too often? Or how do you structure that?
Yeah, so you always have to have a stop loss, right? And even in this position, I have a stop loss there. You must always have a stop loss for that one instance of, just in case, right? So you got to have your stop loss there. But if you know what you're doing, then it needs to be, you got to size up, you got to push it, and you got to wait for that results to turn up. Now, where trading becomes a little bit complicated is timing it. Okay, if we know it's supposed to be at this price and it's currently trading at this price, timing it is so sensitive to a trader. Is if I go a little bit too soon, I'm dead. If I go a little bit too late, I'm late. How do I time this thing just right? And that's the biggest dilemma that a trader has to solve for. And that's what causes a lot of pain. And if someone is trying to solve that dilemma and constantly sticking to the same stop loss mechanism, whether you're trading early or trading late, they're going to have mixed results and, in fact, more dangerous results that might be overall negative.
But what about these periods where you have multiple trades in a row that lose money, or that you maybe go through a few losses? How do you get out of that?
Well, this is a thing that we've actually, launched a meditation app for traders for this particular reason. Losing is part of the game. Losing is part of the game. Drawdown is part of the game. Having no drawdowns and only upside, it's, you find me that person as an investor. I will pour so much money into that guy or girl. It's just very, very rare to find low risk, ultra high reward. Very, very rare. That's what we try to do all day, every day. But to find something to do that consistently nonstop is basically, we don't even need to look for that person. The market will find that person and saying, that's the guy. That's the guy who does low risk, high reward. He's better than Warren Buffett. Give him all the money. It doesn't exist. It doesn't exist. It's a rare thing to happen. And if it does happen, it's not a secret. It's going to end up on Forbes. It's not a secret.
You mentioned something interesting, which is you tend to add to positions over time too. Like you tend to scale into them, which is something I've started doing probably last year only. I know we talk about this for multiple times, multiple years. But tell me a bit more about how you do it and how do you get comfortable with doing that, adding to your trades as they're going in your favor.
So I generally size biggest on my initial. Okay, so I go very, very large when it gets to my area of comfortable competence area. So if prices are coming down and it's reaching an area that I'm particularly interested in, whatever strategy that you guys might be doing, when it gets to my area, I go the largest there. And as my trade idea is starting to develop, then I go smaller sizes as I add in. And the higher it goes, the lesser of size I add in. I don't actually go the opposite. So imagine it like a pyramid. The lowest one is the largest size, and as it goes higher and higher, the size gets smaller and smaller. So not to mess up the average and getting the average price too high. We still want a deal, so we want to be based wherever it's the cheapest, not the most expensive.
And you tend to trail your profits along the way, like you put a stop loss closer to your entry, or kind of making break even as you go forward, or?
So it's slightly below the averages. So for example, if right now my stop loss is here and then I add more size along the way and it's lesser of a size, then my stop loss will go up just ever so slightly because my position doesn't change too much. It still stays closer to the original price. So I still want to be around there. Now, obviously there are times where we want to move it to break even, start locking in 10%, 15% of the gains because you don't want to turn a winning trade into a loser. But to trail it to a point where we choke the trade, I don't do that.
What makes you want to take some partials off the trade? Is it like certain levels, or how do you look at that?
Oh yeah, so let's say my target is a number 150, for example. If that's my target, if suddenly the market has jumped and it's at 170, now two things go through my mind. How did it get there so fast? And it's above my target. I will extract 60, 70%. And I'm curious to see what's with the power. Where is this headed? So I will leave a size in there to see how much further I can take this. Because, I don't know it all. The market surprises me every now and then. Trump surprises me with his tariffs every now and then. So, I don't know it all, but it happens. It happens multiple times.
What do you see as the common mistakes people make? Maybe they learn your strategy and they go and they start to apply it. What is the common mistake you see them make once they know the strategy already and they go in the market?
Oh, they go too big, too fast. I've seen that time and time again. So, when they learn something new, they go all in. As much as I admire that type of mentality and mindset in real life, that's the best way to live. When you learn something, you go all in and you figure it out. But when it comes to trading, that mindset is actually detrimental. Like, you do want to go all in with your education, with your learnings and your trial and errors, but you don't want to go all in with all your capital. That's something you should really protect, because at the end of the day, trading and investing, they share one same paradigm, which is you've started with this little nest egg. The goal is to grow it. You're not trying to say nothing exists, I'm just going to take money off the market. That doesn't happen. You come into the market with something and you want to grow that something. So this is the most important piece, even more than the market itself. And I think people tend to neglect that.
You get people who go too fast, too big, and people who go maybe a bit too slow into kind of scaling up. How do you find the balance between these two things, like going not too fast, but still progressing and still scaling up over time as you get better?
It's a slow process, and it's different for everybody. I don't know how others do it. I've seen statistics, even in my company, how students come in. I've seen statistics. Yeah, there's both sides. There's the aggressive side, and there's also the ultra conservative side, who are very scared to even pull the trigger. So I've seen both sides of things, but I can just tell you from my own experience is I've recently started scaling in very, very heavy, where the numbers are getting up there in the upper six figures. But before that, I wouldn't do that at all, because my lifestyle was at a much lower rate that I wasn't comfortable hitting numbers at six-figure numbers. So I had to push myself into that thing. Now, I'm saying this being a trader since 2009 until now. So I've been doing this for a very, very long time. And if I'm telling you that it takes that long to get comfortable with it, some might do it faster. But the fact that if someone thinks they want to do this right off the bat, that's when the bad times come, it'll wipe that person out. It won't damage the account, it'll wipe them out. And that's the one thing we want to avoid. And as instructors, we definitely want to make sure that they don't get to that level. They want to protect their nest egg.
Tell me where people can find you and connect with you after this podcast.
If they're interested in financing, wealth generation, and learning more about, how do you live the best life that you can live and have so much money in abundance that you can make generational wealth, then our website is called anticipate.ae. AE represents the UAE. So that's Anticipate. The company's name is Anticipate Don't Participate, and it's anticipate.ae. But for those of you guys who are looking for more technical and more day-to-day trading and finding out how do I do things in a more precise fashion, then that's urbanforex.com. As you've known, we've done multiple urban forex related podcasts here as well. So I hope those were useful. I've done, you always pull out a lot of information out of me, and I've openly shared. I hope they've been useful for your audience.
Tell me about the wealth side. What do you focus on then? What do you help people with?
So we try to train them on, when you enter the markets, everyone's entering the markets of how do I make as much money as possible? So if you actually take the average Joe off the street and you ask him, what's your goal? And they will say, I want to make a lot of money. So how do you do that? Right now I'm making $10 an hour. I would love to make $2,000 an hour. So there is a mentality that they have where it's I just want more cash. I just want more cash coming in all the time, when in reality they don't understand cash is the worst thing that you can have. It's the worst thing that you can have. It's a weapon that you can use, but it's not something you want to hoard. But that education is missing for, at least at the lower level, where the average Joe is probably a student or comes from a medical background. All these hospitals that I buy and clinics that I've been buying in Dubai, you'll be surprised. Even doctors don't have a financial background. They don't understand where am I supposed to do with my money. They just understand how much cash is coming in. More is good, rather than understand what's the difference between how do you develop wealth? How does money work for you? So we go into that aspects of investing. How do you invest in the right things that can give you generational wealth, through stocks, through real estate, and assets of that sort. And how do you read inflation? How do you combat inflation? Do you even know what is inflation? So all of these things trained in a very simplistic format where the average person will be like, I knew the big boys were holding back something from me because it's not taught in schools.
Appreciate your time here, Navin. Appreciate the advice you give to the listeners. Of course, they will reach out to you and follow you there for sure. And I will put all those links below. They can reach out to you directly there. Hopefully, we can have you back on and talk trading again. It's been a lot of fun.
Thank you. It was actually wonderful talking to you again, Etienne. And as always, I'm happy to be here with you during these milestones that you achieve. Once again, congratulations on the prop trading secrets. I look forward to reading this on the plane today. Thank you for having me again.